For majority of the Canadians, an asset allocation ETF is the simplest way to invest money in the stock market. In this video, I'm going to explain what an asset allocation ETF is, what is the pros and the cons of buying one of these asset allocation ETF. The leading ETF providers are in the asset allocation ETF space, and who should use these asset allocation ETFs to grow their money. Now, when you try to build a diversified portfolio, you should look into investing your money across different geographic investment. For example, a lot of Canadians invest a little bit of their money in the US stock market, maybe a little bit in the Canadian stock market, maybe some portion of their investment in the international space. Sometimes invest their money in the bond market. To buy each of these sectors, they need to invest in an ETF or exchange traded fund that tracks that kind of investment. For example, if somebody is trying to buy US investment, most people buy an exchange traded fund or ETF that follows the maybe S&P 500. Now, if you want to diversify your overall portfolio, then you can buy a list of ETF that tracks the different market, and that way you will be able to build a portfolio. A decade ago, that was the approach for most investors. A few years ago, a new solution came out, which is a single ETF that is going to do all the work for you, meaning that once you buy that single ETF, that specific ETF is going to buy a little bit of your investment to US stock market, a little bit in the Canadian stock market, a little bit in international space. And if you want to buy a bit of the bond market, that single ETF is also going to buy that portion. Now, this single ETF is called Asset Allocation ETF, which is basically a single ETF that is investing in different types of ETF under its own umbrella. The biggest benefit of investing in an asset allocation ETF is the simplicity. You just buy one ETF and forget. That is the single biggest reason why investing has become so easy in the last few years when these asset allocation ETFs came out. The other benefits of investing in asset allocation ETF is it constantly rebalance those underlying fund. So imagine that you bought $100,000 in an asset allocation ETF, but within that asset allocation ETF, one market may go up or down in a different proportion compared to the other geographic markets. For example, let's say US stock market last year went up a lot compared to the Canadian or international one. The asset allocation ETF fund will automatically sell some US ETF and redeploy that money across the other ETFs within that asset allocation fund. This way, you do not have to do the rebalancing yourself. The asset allocation ETF is going to do it itself. The other big benefit of investing in an asset allocation ETF is the diversification factor. You do not have to buy different geographic ETF. The asset allocation ETF is already going to do that for you. Instead of buying each ETF for each different market and each different type of bond, you just buy an asset allocation ETF based on your risk profile, and it's going to automatically invest in different geographic market. And the final benefit of these asset allocation ETFs are, as technology has become more easy to access, these providers are offering these ETFs at a very affordable cost. The average range of these ETF cost is anywhere from 20 basis point to 25 basis point, meaning the cost of these ETFs is 0.2% to 0.25%, which is very reasonable for this kind of product. However, the only concern of this asset allocation ETF is if you buy one, you lose the option to do tax location. Now, 99% financial advisors in Canada do not do any tax location, and they don't see much value in that process. However, for larger client base, like people who have millions of dollars, tax location might be saving a lot of money if you do it right. If you don't know what tax location is, check out this video that explains what a tax location is. Now, in the asset allocation ETF space, the biggest providers are Vanguard and iShare. Vanguard, as we all know, is the proponent of index investing, and iShare is offered through the BlackRock company, which is a global giant in this space. Now, BlackRock has partnered up with RBC, so RBC does not have any ETF on its own, but they use RBC iShare ETF, which is the partnership between BlackRock and RBC. Now, the first asset allocation ETF that we are going to review is from Vanguard. If you go to Vanguard's website and search for asset allocation ETF, they'll give you a list of 6 different types of asset allocation ETF that you can buy. Basically, each of these ETFs are for different types of investors. VEQT, which is the 100% equity portfolio, has no bond in it, meaning it's all invested in individual stocks. If you go down a little bit, you will see there is balanced ETF, there is conservative ETF, there is conservative income ETF, there is growth ETF, and there is retirement income ETF. What you need to do is figure out what risk level do you fall under. So if you are somebody who has no interest investing in bonds and lots of risk capacity, then you might be tempting to buy one of these all equity ETF or maybe a growth ETF. So that's where the advice from financial advisor helps you. And the good thing about these robo advisors these days is they give you the automation where they will ask you some question, and based on your response, they will guide you which of these ETFs are most suitable for you. But if you know yourself, you can also select the one you like the most. Now, as you can see, these are all in the Canadian dollar. They are traded in the Canadian stock market. MER is the amount of fees that you pay to Vanguard to manage this fund. This is the fee you will be paying every single year. If you go to the right side, you will see the size of each fund. The largest fund is the growth portfolio, growth ETF portfolio, which is over $6 billion. The smallest one is the conservative income portfolio, because most conservative investors typically deal with different advisor, and financial advisors typically don't use asset allocation ETF. They use individual ETF. Maybe they need to justify their investment management and collect fees, and that's why they don't buy this asset allocation ETF. But as you can see, if you are in growth side, you can buy one of these ETF. The next one that I'm going to explain is the iShare, which is basically the RBC one. So RBC has partnered up with BlackRock and introduced the iShare series, and you can see there are 5 different levels of portfolio. The core income one is the most conservative, then the core conservative balanced, the balanced portfolio, core growth ETF, and the core equity portfolio. If you look at this chart, you will see that the equity portfolio has all underlying stock in it, so there is no bond portion in it. And the fees for all of this fund is around 0.2%, which is basically what you pay every year. If you go down a little bit, you can see the breakdown of what those underlying ETFs are in each of these portfolios. So for example, when they are building this XEQT, they are going to invest your money in these different weights in these 4 ETF. I believe 25% is going to the Canadian equities XIC, 45% goes to ITOT, which is the US equities, and then 25% goes to XEF, and 5% goes to IEMG, that ETF. As you go to the left side, they probably invest in more funds, and you can see the breakdown here. If you spend a little bit of time and figure out where you feel comfortable, you can buy one of these ETF. And as I said, Robo Advisors does the job for you. But to do this kind of analysis, Robo Advisor charges a separate fee where If you don't use their service, you have to do the work yourself. Your financial advisor does a similar job, but sometimes they add a few more aspects that these robo-advisors can't do. Sometimes the financial advisor can talk to you personally and they can feel whether you will be able to handle any market drawdown. So that way they can adjust the risk level of the portfolio and may recommend something else, which will be very similar to what a robo-advisor does, but it may not be exactly the same. The third one, which is basically the BMO one, BMO has been one of the first large banks in Canada offering ETF to the Canadians. BMO has launched these ETF where you can buy one of these asset allocation ETF and invest and forget about your day-to-day return. Now, if you go up, you can see all the benefits of investing in an asset allocation ETF, and their fees are, as I said, pretty close to 0.2%. The fourth option is from Global X. These ETFs used to be called Horizon ETF, but Horizon did a rebranding a few years ago, and now they're labeled as Global X. They also have 5 different type of ETF, and they actually have a lot of different types of ETFs which uses some derivative product. Now, for most Canadians, this might not be ideal because these derivative products introduces complexity in the portfolio. But if you are interested, make sure you understand what you are buying in, because sometimes the way they describe and explains in their prospectus may not be very easy to understand. But if you go up, these are the asset allocation ETF, and if you select one of these, you can read the details how they invest. For example, these growth asset allocation ETF, as you can see, the fees are this, and they probably invest in similar fashion to the other ones that we have looked so far. Now, the new entrant to this market is TD. TD has launched 3 different ETF, which is their balanced ETF, conservative, and growth ETF, and they launched it 4 years ago. The fees are a little bit cheaper than the other 4 that we looked at, but in the grand scheme of things, these fees difference is very minuscule. So if you are a fan of TD product, these are probably your solution. Now, CIBC also has some ETF product, but I'm not sure how they trade on the market. I was able to find this ticker on my brokerage account, but I don't know the difference because this looks a little bit different than the other ones we have looked at so far. These ETFs has a very similar features like a mutual fund, and I can see the fund code for these ETF. So I'm not sure how they trade on the market, but the fees seems to be pretty high compared to the other one. So make sure you check it out and understand what's the difference between this one and the other one. But I believe they are offered through the branch level, and that's why the fees are a little bit high. But don't quote me on the details on this CIBC ETF. My understanding is virtually everyone who is in the saving stage of their life, asset allocation ETF works just perfectly for those people. The general rule of thumb is if you have a less than $1 million account, asset allocation ETF might be the solution for you. The benefit of picking up individual stock is not going to be big enough to take the hassle. For people who want to invest, control their money by themselves, don't want to work with a financial advisor, and just need a solution to save money every year, this is a perfect solution, and this is going to serve majority of the Canadians. That's all I had for this video. If you have any other question, make sure to put that in the comment section. You can also email us and let us know your questions so that we can answer that in the next video. Thank you for watching and see you in the next video.